Hello friends, for opening Demat account, please make use of the link available in description. Totally in our channel we have prepared 10 videos in the fundamental analysis series. This is the third video. Please watch these 10 videos one by one so that you can easily understand the concept. Definitely these 10 videos will help you for doing fundamental analysis. Remaining videos link are in description. In share market, for finding out good shares, we are going to use 8 parameters as screening tools. Using that 8 parameters, we can find out the good shares. After that, what we are going to do is, we are going to calculate the expected returns from that good shares. If the expected returns from that good shares is at least 25%, then only you think of investing in that shares. Suppose the expected returns is less than 20%, then please stay away. In this video, I am going to discuss about first and second parameter. First parameter, we are going to analyze the company's shareholding pattern. Second parameter, we are going to analyze the term reserves and surplus which is available in balance sheet of the company. How to do the analysis, we will see detailedly in this video. Normally, all the company's data will be updated in Money Control website. In Money Control website, at the top you can find the search option. In that you can enter the name of the company which you like to search. I had entered Reliance Industries Limited in the search option. Like this, Reliance Industries Limited data will be opened. At the top you can find many links like valuation, financial, annual report. Like this many links will be available at the top. In that click the link shareholding. Like this, Reliance Industries Limited shareholding pattern will open. In Money Control website, last 4 quarterlies shareholding pattern will be mentioned. This will be more useful for doing analysis. Always recent data will be mentioned at the left side. In this you can see September 2019 data was mentioned at the right side and June 2020 data was mentioned at the left side. In any company, in first row they will mention how much is the promoter's holding, like that. Always don't think in any company only one person will be a promoter like that, because a group of people also can become promoters. In shareholding pattern, first what we have to check is whether the promoter is holding maximum percentage of shares or not. In my point of view, promoter should hold at least 40% shares. Suppose promoter is holding 40% shares or more than that, then it is considered as positive sign. Next, what we have to check is when compared to previous quarterly, in current quarterly promoter holding had increased or decreased. That we have to check. But blindly we should not think in promoter holding if share percentage had decreased, then it is a negative sign. Like that, blindly don't think. Suppose when compared to previous quarterly, in current quarterly if share percentage had reduced by 5% or 10% in promoter holding, means promoter had sold bulk quantity of shares and he had raised fund by selling that shares. That is the actual meaning. Here what we have to check is for what purpose that company's promoter had raised fund. That we have to check. That we can easily check it from Google. For example, if any company raise fund for starting new projects or for developing the business, then it is a good sign. But if the company's loan amount had increased and for settling that loan, if the company had raised fund, then it is a negative sign. Suppose when compared to previous quarterly, in current quarterly if share percentage had increased by 5% or 10% in promoter holding, means promoter had purchased more quantity of shares. That is the actual meaning for that. From this indirectly what we can understand is promoter have more confidence on his business. Like that we can understand. So that many investors also will get confident on his business. And because of this, in future that company's share price may also increase. Next we have to check FII category. All the foreign investment is considered as FII. In any company, if FII category share percentage is high, then it shows that in that company foreign investment is more. Suppose in any company foreign investment is high, then that is considered as positive point for that company. In shareholding pattern, very important thing we have to check is whether the company had pledged any shares or not. Like that we have to check. What is the meaning for pledging of shares? We will see now. Some of the companies used to take loan by keeping the company shares as security. That is mean by pledging of shares. Suppose if any company apply for loan from bank and if that loan was rejected, that itself a big negative point for that company. From bank, if any company couldn't get loan, then in last option that company will go for pledging of shares. So if any company shares were pledged, then it is a big negative sign for that company. Sometimes while hearing the share market news, you may note down this word encumbered. This word encumbered and pledged both are same meaning only. In shareholding pattern parameter, for which part we has to give weightage means check whether maximum percentage of shares are in promoter holding like that. For this, you can give 30% weightage. Next, check whether any shares are pledged like that. For this, you can give remaining 70% weightage. Now, we will check the Reliance Industries Limited shareholding pattern. In Reliance Industries Limited, promoter holding is averagely maintained at 50%. Next, shares are not pledged. So, in Reliance Industries Limited, shareholding pattern parameter is positive sign. Now, I had opened shareholding pattern of Yes Bank. In Yes Bank, at present, promoter holding had become 0 and also no shares were pledged. In Yes Bank, what actually happened we will see now. Suppose from bank if I take loan against my gold and if I didn't repay the loan, then bank will sell my gold. Same thing happened in Yes Bank also. Yes Bank had taken loan from a company by pledging their shares. Finally, that Yes Bank promoter had failed to repay the loan. So that company had sold the shares. So that only promoter holding had become 0. This is a big negative sign for Yes Bank. In Yes Bank, only one positive thing happened. Recently, SBI, HDFC Bank, Kotak Mahindra Bank, they had invested a huge amount in Yes Bank. This is a positive news for Yes Bank. So that only under a total DII category, in financial institution, 42% shares are mentioned. In Yes Bank, shareholding pattern parameter is negative sign. But at any cost, Indian government will not allow any bank for bankruptcy. So, we have to wait and see the performance of Yes Bank, and suppose if they start performing good, then after that we can think of investing in Yes Bank. In any company, if any type of fraud is happening, then for investors, initial warning will be given by this shareholding pattern parameter only. Suppose if any company's promoter is continuously reducing the shares in promoter holding, then you should be very careful on that company shares. For this, one of the best example is Satyam fraud. Satyam company promoter had involved in fraud and he had managed auditor, and with the help of auditor he had managed balance sheet and profit and loss account. But in the other side, Satyam promoter had sold many shares and he raised the fund. That fund he had shifted to his own account. Before the Satyam fraud, initially Satyam company promoter holding was around 50%. But in few months, he had reduced the shares in promoter holding to 5%. After that only, Satyam fraud had came out. So, whenever any company promoter is continuously selling the shares, then please analyze that company very carefully. Second parameter is reserves and surplus. In this fundamental analysis series, in second video, we have discussed about accounting equation. That is, total equity plus liability is equal to assets. In this, total equity means, in simple it is owner's fund. That is, in any company's total asset value, how much fund belongs to the owner. That is called as total equity. Here, owner means not only promoter, all the shareholders also will come under the category owner. We can split total equity into two types of fund. First is share capital, second is reserves and surplus. In simple way, I will tell one example. I have 10 lakh rupees in my hand and with that amount, I like to start a business. Let me assume that with the investment of that 10 lakh rupees, I had opened one departmental store in Chennai And one more assumption let me take, that is, for starting this business I had not taken any loan from any bank. Like that, let me assume. Now I had started my departmental store. Here initial investment is 10 lakh rupees. This is considered as share capital because I had started my business with that 10 lakh rupees only. So that is considered as share capital. In my business, liabilities will become zero because I had not taken any loan from bank. Let me assume that in next few years I had got a huge profit from my business, and with that profit amount I had built a shopping mall in Chennai. Like that, let me assume. And one more assumption let me take, that is that shopping mall total asset value as 1 crore rupees. That means my business asset value had increased from 10 lakh rupees to 1 crore rupees. My shopping mall's total asset value is 1 crore rupees. In that 1 crore rupees, 10 lakh is considered as share capital. That is initial investment. Balance 90 lakhs is nothing but reserves and surplus. In this example, my 10 lakh rupees is the initial investment. That is nothing but share capital. That 10 lakh rupees had grown into 1 crore rupees. That is nothing but total equity. Here 90 lakhs is the reserves and surplus. From this example, you can easily understand what is share capital, what is reserves and surplus, and what is total asset. At the end of every financial year, all the company's profit will be added to reserves and surplus. So, if any company's reserves and surplus is increasing year by year, means that is considered as positive sign. Where to check this reserves and surplus data, we will see now. In Money Control website, I had entered Britannia in search bar. Like this, Britannia company's data will open. In top, you can see many links available. In that, click Financial. Here, if you click Financial, then below that many link will open. In that, click Balance Sheet. Like this, Britannia company's balance sheet will open. In this, all the numericals were mentioned in crores. Here, they had mentioned total shareholders fund. Total shareholders fund is nothing but total equity. Under total shareholders fund category, there will be two terms. First is equity share capital and second is reserves and surplus. Like these two terms will be available. In this, equity share capital means how much the Britannia company promoter had initially invested for starting the business. That is equity share capital. Next we will see about reserves and surplus. That is that initial investment amount, now how much it had grown. That is reserves and surplus. In simple, if I want to tell this means, Britannia company promoter had invested 24 crore rupees initially for starting this business. That 24 crore rupees had now earned totally 4,250 crore rupees. That is the actual meaning for this. In reserves and surplus parameter, what actually we have to check means how much percentage reserves and surplus is increasing year by year. That we have to check. Always previous year data will be mentioned in the right side and current year data will be mentioned in the left side. In Britannia industry, 2016 reserves and surplus is 1,676 crore rupees. In 2017, reserves and surplus is 2,558 crore rupees. That is, when compared to 2016, in 2017, reserves and surplus had increased by 52%. Next, in 2018, reserves and surplus is 3,211 crore rupees. That is, in 2018, almost 25% growth. Next, in 2019, reserves and surplus is 4,015 crore rupees. That is, when compared to 2018, in 2019, 25% growth. Next, in 2020, reserves and surplus is 4,250 crore rupees. That is, in 2020, only 6% growth we are able to find. In Britannia Industries Limited, there is a nice growth in the reserves and surplus in every year. So, this is a positive sign in case of reserves and surplus parameter. But in 2017 and 2018, reserves and surplus growth was very high. But in 2020, the growth had reduced. In 2020, why the growth is very less means, at present, there are so many competitors for Britannia company in the market. One more common reason is coronavirus. But anyway, Britannia is one of the standard company. So if they improve their strategy in future, then they can perform well again. Next, I had opened Jet Airways balance sheet. Jet Airways share capital is 113 crore rupees. That is, Jet Airways promoter had initially invested 113 crore rupees for starting this business. Next, if you see the Jet Airways reserves and surplus, it is increasing year by year, but all the values are in negative. The values are negative means Jet Airways is going in big loss. That is the actual meaning for that. Don't think that if any company earn profit, that profit alone will be added in reserves and surplus like that. Don't think. Companies' losses also will be added in reserves and surplus only. So that only Jet Airways reserves and surplus value is in negative. Like this, if you see any company's reserves and surplus is in negative value, then it is a big negative sign for that company. So beginners better avoid this type of companies. Next, I had opened balance sheet of DMart. DMart is nothing but the brand name of Avenue Supermart. Its share capital value is 647 crore rupees. That is, initial investment for starting the Avenue Supermart is 647 crore rupees. Next, reserves and surplus for DMart is increasing year by year. So, reserves and surplus parameter is positive sign for DMart. At present, in share market, DMart is one of the good share. Suppose, if any one company's reserves and surplus growth is very high, then by checking this only one parameter, we cannot invest in that company. What is the reason behind this? We will see now. Among the companies, there are two major types of trading system were followed. One is cash trading system, second is accrual trading system. For example, let me take three assumptions. First assumption, I was running one automobile industry. Second assumption, in my automobile industry, one automobile price is 1 lakh rupees. And third assumption, in this year, totally 100 automobiles I had sold. Like this, three assumptions I had taken. In this year, totally I had sold 100 automobiles. If I sell all that 100 automobiles after collecting the full cash from the customers, then that is called as cash trading system. In this cash trading system, first I will collect the cash and then only I will give the automobiles. Totally I had sold 100 automobiles. So 100 automobiles into 1 lakh rupees, 1 crore rupees will come. That is, if I follow cash trading system, then in my hand totally 1 crore rupees will be available. We will take this example in another way. That is, instead of cash trading system, if my company sells the automobiles in credit basis also, then that is called as accrual trading system. For example, in my automobile company, let me assume that for 60 automobiles, customer had paid the amount and they had taken the automobiles. Like that, let me assume. And for remaining 40 automobiles, I didn't receive the cash. Instead, for that 40 automobiles, in credit basis, I had sold that 40 automobiles. Like that, let me assume. In this accrual trading system, I had received cash for 60 automobiles only. So, in my hand, 60 lakh rupees only will be available. Remaining 40 lakh rupees is considered as trade receivables. That is, in future, my company will collect the cash from that customers. In India, most of the company follow this accrual trading system only. In my company, due to accrual trading system, in my hand I have only 60 lakh rupees. Remaining 40 lakhs is trade receivable. In this calculation, for example, let me assume that my company's operating expenses, depreciation and amortization, loan interest and tax, like this, all the total deductions as 50 lakh rupees. Now, if I deduct 50 lakh rupees, balance I will get only 10 lakh rupees in my hand. Remaining 40 lakhs is considered as trade receivable. In this trade receivables, there is no guarantee that that customer will repay the amount or not, like that. So, in my hand only 10 lakh rupees is available as real profit. But in the year end, my company's total profit will be calculated as 10 lakhs plus trade receivables 40 lakh rupees. That is, my company's total profit will be 50 lakh rupees. This 50 lakhs will be added to reserves and surplus. In any company, there is no guarantee that the amount which was mentioned as trade receivable will be received by that company like that. Suppose in any company that trade receivable value is increasing year by year, then that is a big negative sign for that company. Many people used to check this only one parameter, and if reserves and surplus growth is very high, then they will start investing in that company. Please don't do that mistake. Totally we are going to discuss 8 parameters. Give the equal importance for all the 8 parameters. Suppose if any company is really making good profit, and because of that if reserves and surplus is increasing, then there is a chance that in future that company will give high dividend for their shareholders. In our channel, we have prepared totally 8 videos in the concept of basics of stock market. Please watch those videos for understanding the basic terms in share market. All the videos link are in description. If you have any doubt in this video, please make a comment, I will reply.